For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. SoFi Technologies has been on an exciting path ever since it launched its digital-only financial services in the year 2011. Over the past 3 years, SoFi stock has climbed by an impressive 223%. This strong performance is due to the company's rapid expansion and its ability to attract customers to its all-digital financial services platform, which is quickly becoming the preferred choice for people who value convenience, simplicity, and modern banking solutions. Even though SoFi remains a relatively small player in the financial industry, the company is still in the early stages of its growth journey. Right now could be a very attractive time for investors to consider buying shares because the company is laying down solid foundations for future success. To help you understand why SoFi has captured the attention of investors, let's take a deep dive into 5 key reasons why SoFi could continue to grow and reward shareholders. The first reason is SoFi's impressive ability to attract and retain customers. The company is doing an outstanding job of bringing new users onto its platform. In the first quarter of 2025, SoFi added a record-breaking 800,000 new members, which represents a 34% increase compared to the same period last year. This strong customer growth is especially important because SoFi specifically targets young professionals who are just starting their financial lives. These individuals often have stable and well-paying jobs, they are advancing in their careers, and they are likely to continue engaging with SoFi services for many years to come. This customer base has the potential to generate long-term revenue for the company. A key factor supporting SoFi's business is the fact that 90% of the bank's deposits come from direct deposit. This is important because it creates a steady and recurring stream of revenue, which adds stability to the company's financial position. The more customers set up direct deposit with SoFi, the more likely they are to stick with the platform, which helps SoFi grow its user base and strengthen its brand loyalty. The second reason to be optimistic about SoFi's future is the loyalty that its customers are already demonstrating. SoFi recently rolled out a membership program called SoFi Plus. What is impressive is that 90% of the people who signed up for this program in the first quarter were existing SoFi members. This shows that SoFi has built strong relationships with its users. On top of that, 30% of these SoFi Plus members adopted a second product within just 30 days of signing up. This high level of engagement means that SoFi is successfully cross-selling its services, which boosts revenue and deepens customer relationships. The third reason is SoFi's rapid financial growth. For a banking institution, SoFi is expanding at an impressive pace. In the first quarter of 2025, the company's adjusted net revenue increased by 27% year over year, which indicates that its growth is accelerating. Several factors are driving this expansion. These include lower interest rates, successful cross-selling of products, and the continuous addition of new members to the platform. One of the most important drivers of SoFi's growth is the stabilization of interest rates. This has strengthened SoFi's core business, which is lending. Lending revenue grew by 25% year over year in the first quarter, and contribution profit increased by 15%. There was solid performance across multiple loan categories. Personal loan originations increased by 69%, student loan originations grew by 59%, and home loan originations rose by 54% during the quarter. These gains highlight the demand for SoFi's lending products and demonstrate the company's ability to meet the financial needs of a wide range of customers. The fourth reason lies in the strength of SoFi's financial services segment, which includes non-lending services. In the first quarter, revenue from this segment increased by 101% compared to the previous year. Even more impressively, contribution profits from this segment skyrocketed by 299%. The contribution margin also improved significantly, growing from 25% to 49%. This means that as SoFi adds more users and generates higher sales, it is achieving greater scale, which in turn leads to stronger profitability. The company is also shifting more of its revenue toward lower-cost fee-based services. In fact, fee-based revenue has increased from 26% of total revenue in 2021 to 41% in 2025. This shift not only improves margins, but also reduces reliance on interest income, making SoFi's business model more resilient. SoFi reached a major milestone when it reported its first annual profit in the year 2024. Management expects this profitability to continue growing this year and in future years. In the first quarter of 2025, adjusted earnings per share reached 6 cents, which was an improvement from 2 cents in the same period last year. Management is guiding for full-year earnings per share to reach either 27 cents or 28 cents, up from 15 cents in the previous year. Wall Street analysts are forecasting earnings per share of 28 cents this year and 46 cents next year, indicating optimism about SoFi's ability to sustain its financial momentum. The fifth reason to be excited about SoFi's future is the positive impact of lower interest rates. Lower rates make it easier for people and businesses to borrow money, which naturally boosts loan demand. This is good news not only for SoFi, but also for the overall economy. Federal Reserve Chairman Jerome Powell recently commented that he would have made additional rate cuts if not for the influence of new tariffs. The market still expects more rate cuts in the second half of the year. This environment benefits SoFi by enhancing its lending business, which in turn strengthens the company's position and prepares it for future economic cycles. In addition to benefiting from the interest rate environment, SoFi has made smart moves to diversify its business beyond traditional lending. The company has been expanding into financial services that appeal to its core market of tech-savvy young professionals. This diversification helps SoFi stand out in an increasingly crowded landscape of online banks. One of the company's recent moves was the announcement that it would reintroduce cryptocurrency trading on its platform. SoFi had previously removed crypto trading when it obtained its banking charter in 2023 due to regulatory concerns. Bringing back this feature caters to a significant portion of SoFi's user base who are interested in digital assets. Moreover, SoFi is planning to launch self-serve global remittances on its app. These remittances will be processed over a blockchain network and will provide a more efficient and cost-effective alternative to traditional international wire transfers. Another notable point is that SoFi's stock has increased by 25% this year as more investors recognize the potential of the business. Despite this strong performance, many believe that SoFi still has a long runway for growth ahead. The combination of customer loyalty, cross-selling success, rapid financial growth, strategic diversification, and favorable economic conditions, with its stock rising over 223% in the last 3 years. The company attracts young professionals who are starting their financial journeys and has built a loyal customer base, adding 800,000 new members in the first quarter of 2025 alone. The company recently reported its first annual profit and expects earnings to continue rising, supported by lower interest rates that boost borrowing. Additionally, SoFi is innovating with new offerings such as cryptocurrency trading and global remittances using blockchain technology. These factors combined have helped SoFi's stock increase by 25% this year, indicating strong investor confidence and significant potential for continued growth. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.